Assalamualaikum dan salam sejahtera. Today, we will present about the auditing current asset. So, this is our member groups, Muhammad Arif, Aleeya, Puteri Nuraisyah, Tanesha Ravy and Athilah.
Hi guys, my name is Aleeya Binti Muhammad Nazarrudin and my matrix number is F1077 and I want to discuss about the nature of the current asset. Now, let's discuss the nature of current asset. Current assets are resources that a company expects to use, sell or convert into cash within 1 year or within its normal operating cycle. There are few key characteristics of current assets, like short term. They are usually used or liquidated within 12 months. Highly liquid. This means they can be easily converted into cash when needed, constantly changing. Their balance change regularly because they are directly tied to day-to-day business activities. Operational, current assets play an important role in supporting daily operations of a business. So, for the last one, valuation principle. They are recorded at the lower of cost or market value to ensure fair reporting. Some common examples of current assets include cash and cash equivalent, account receivable, inventory, marketable securities, and prepaid expenses. In short, current assets are crucial because they reflect a company's ability to meet short-term obligations and keep operations running smoothly.
So now I'm going to discuss about 3.2, provide appropriate audit assertion and accounting treatments. Firstly, what is assertion? Assertion is a claim or representation made by the management. First, existence. Verify that the record of current asset actually exists during the reporting date. Second, completeness. Ensure all the current assets that should be recorded are included in the financial statements. Third, rights and obligations. Confirm that the entity has legal ownership or control over the current asset. Fourth, valuation and allocation. Check the current assets are recorded at the appropriate values with adjustment issues like doubtful debt or obsolete inventories. And lastly, presentation and disclosure. Ensure that the current assets are properly classified, described, and disclosed in accordance with the accounting standards. Here, let's talk about the accounting treatment for current assets. So, current assets are accounted for based on their nature to ensure accurate financial reporting. So, cash and bank balance are recorded at face value with regular bank reconciliations. Account receivable are recorded at invoice value and adjusted for doubtful debt using aging analysis. Inventory is valued at the lower cost and net realizable value using method like FIFO or weighted average. In other hand, prepayment are recognized when payment are made in advance and are amortized over the benefit period. So lastly, short-term investment are measured at fair value with changes recognized in profit or loss or other comprehensive income depending on their classification.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Arif bin Norazmi and my number matrix is F1074 and I'm going to talk about question 3.3, provide the discussion of the accounting system and control activity related to current asset. First of all, I'm going to talk about accounting system for current asset. Account system is ensure the transactions are accurately recorded, classified and reported according to accounting standard. First, I'm going to talk about cash equivalent. All transactions must be recorded in cash book and matched with bank statement. A proper system helps detect error or fraud through bank reconciliation. Second of all, account receivable. Credit sales are recorded under each customer in subsidiary ledger. And an aging report report show which customer have overdue payment. And the third one is inventory. Inventory can be updated using a perpetual or periodic system. Company must choose a method value to value inventory, either FIFO, weighted average or other. And the last one for the accounting system is prepaid expenses. The system will then slowly convert this asset into an expenses over time. Payment for future benefit are recorded as asset. This is done using a monthly amortization schedule. And now, I'm going to talk about control activity for current asset. Control activity are policy and procedure that ensure the reliability of financial reporting and safeguard of asset. First of all, I'm going to talk about cash control. All payment must be authorized by management. And monthly bank reconciliation are done to detect differences. And the second one is account receivable control. The company should check, report and follow up on unpaid debt. Collection staff should be different from those recording sales. And the last one is write-off debt must be approved by authorized person only. And the third one is inventory control. Use barcode system helps track system stock accurately, and access to inventory should be limited to authorized staff only. And the last one for the control activities is prepaid expenses control. All advance payment must be approved before being made, and supporting document like receipt or contract must be reviewed. And that's all from me.
Next, I and my friend will present 3.4, apply the audit procedure by evaluating the evidence provided or recommended to support the assessment and accounting treatments.
I will explain about the main idea of this slide, which is the auditor is checking if the inventory records are correct and match reality. The first one is transaction related to audit objectives. Ensure and confirm occurrence of inventory. Make sure the inventory really exists and is not a fake numbers. Example, if the book says 100 boxes of apples, the auditor wants to make sure there really are 100 boxes in the storeroom. The second one is to verify inventory transactions are recorded in the proper period cut-off. Check that sales or purchases are recorded in the right period, not shifted to make results look better. Example, if apples arrive on December 31, they should be recorded in December, not January. The second one is test of control, checking the company's process. Review and test procedures for processing inventory included on receiving reports into the perpetual records. We have to review how the company records inventory from receiving reports into its system. Review the procedures and form used to classify inventory, like we have to review the forms and rules they use to classify different inventory types. The main idea of this slide is about the auditor does substantive procedures, direct checks on inventory data. The first one is review inventory list. Look at the company's full list of inventory and see how it's classified. Example, raw materials, finished goods. Look at the company's official list of inventory and how it's classified. Example, make sure items are in the correct category, not missing spare parts with finished goods. The second one is trace samples. Take random samples of records before and after the period end, year end date. Example, if year end is December 31, take inventory reports from December 29 and January 2. Match them to the weekly inventory report and then match that report to the company's main accounting records general ledger.
Hi everyone, my name is Puteri Nuraisyah binti Jamal Abdul. My matrix number is 06D8023F1083. Today, I will explain auditing procedure on current asset respectively account receivable. First, auditors perform a test of control. This means they check if the company has proper system in place to manage receivable. Next, example of the company's internal controls include: first, checking credit references for new customer before allowing them to buy on credit. Second, setting a credit limit for each customer to avoid being unpaid debts. Then, auditors will prepare an receivable report. This helps to see which customers are late in paying and how long their debts have been outstanding. Lastly, they check how the company follows up with customers who haven't paid on time. So, I want to add some information. The step help the auditor ensure that the receivables shown in the financial statement are real, collected on time and not overstayed. For the next slide, I will explain about substantive procedure for auditing account receivable, which are part of auditing current asset. Here a simple explanation. First, writing to customer. Auditor send confirmation letter to customer to verify if the recorded amounts owed are correct. The second is tracing invoice. Auditors check, inspect sales invoice and match them to the interest in the debtor's account to ensure sales are properly recorded. Third, observing post-year end payments. Auditors check if customer made payments after year end. If payment was received, it proves the debt was real and not debtful. The lastly is recalculation bad debt provision. Auditor recalculate the estimate of uncollectible debts to ensure the company's bad debt provision is reasonable and accurate. This procedure help verify the existing accuracy and valuation of receivable. Conclusion from my group is first, strong controls and evidence ensure reliable reporting. Effective internal controls and proper documentation help auditor trust the accuracy of financial statement. The second, testing cover all assertion. Audit procedure must test all relevant financial assertion like extension, accuracy, competence and valuation. Third is correct accounting treatment critical for fair presentation. Following the correct accounting standard ensure the financial statement are true, fair and not misleading. That's all from us. Thank you.